Welcome, and thank you for joining us today to learn about what the new federal withholding system will be for 2020 and what is going to change on the Form W-4. My name is Rachel Yanchis, and I'm a Senior Marketing Specialist at Viventium. We're excited to have our Consulting Director of Compliance Services, Yonina Shineweather, CPA, and our Director of Compliance Services, Malka Trump, CPA, CPP, this afternoon as they discuss critical changes to your federal tax withholding process next year. Before I hand this over to Yonina, I want you to know that we value your feedback from this session, and we look forward to sharing with you more insights that will help you successfully grow your business. We'll be recording the session, and a link with the recording will be posted on the webinar section of our website. To learn more about Viventium and our payroll and HR services, check out www.viventium.com, and for other new and exciting webinars, you can register at viventium.com/webinars. Yonina, we're looking forward to this session, and I'll hand it over to you to get started.
Thank you so much, Rachel, and welcome everyone. Today's webinar is probably one of the most impactful issues that I've dealt with that you as employers have been facing, are going to face in quite a long time. I would say probably in all of my 29 years in the payroll HCM industry, we've never had such an impactful change. And when I say impactful, I mean something that has significance to the way every single employer in every single state in every single industry is going to be calculating taxes for each of their employees. Now, we've had big changes. We've had the ACA, the Affordable Care Act, but that only generally affected applicable large employers, full-time employees. We have now a final rule issued by the Department of Labor to increase the exemption threshold, the salary threshold test for overtime. But again, that only affects employees that fall between the old thresholds and the new threshold amounts and pass the duties test. So, you know, all of these various payroll developments that have been big, that have been significant, have been limited in scope. The change to the federal tax withholding system affects everybody everywhere, which is why today's webinar covers such important material. And since it is so important, I want to just mention a couple technical things as we get started. On your toolbar, you have a question pane where you can actually type in questions as we go along. And I want to encourage you, everyone who's listening today, to use that toolbar. Those of you who have done webinars with me in the past know that I keep my eye on that as I present, and I try to work in and answer the questions as we go along. And I always like to say that if something is a question for you and you're wondering about it, as we're learning together, then it's probably a question for other listeners as well, and you'll be doing a service for everyone, not just for yourselves, by posting the questions. So please don't be shy. Use the question toolbar. Questions that I don't get to in the course of the presentation, we'll try to have some time left at the end after my colleague Malka shows you her part of the webinar, which will be the actual screenshots of how to do this in Viventium software. And afterwards, we'll try to leave some time for Q&A. And I do want to mention that this is actually the third webinar on this topic that Viventium is presenting. And in my two earlier webinars, I collected all the questions that were typed in, and we're actually publishing a separate blog on our Viventium blog space that's going to be containing those questions and answers. So you can refer to that. And of course, totally anonymously, the questions are posted, but they're helpful for everyone. As Rachel mentioned, the webinar is being recorded. It will be available on our Viventium webinar page. And as promised, if you take a look, there is a handout section on your toolbar. And the first is the slides of today's presentation. The second is that payroll stuffer. There's a Viventium branded payroll stuffer there. And you can use that and you can, modify it and adapt it any way you'd like, but you can use that to help your employees understand what's going to be happening to their tax withholding in 2020. It's written in clear and, layman understandable language, not too technical, just to help employees get their heads wrapped around these changes, which are the biggest changes probably since the Tax Reform Act of 1986, for those of you who remember that. So that said, let's jump in and take a look at a little bit about how we got here. What's the background? Where is this major change coming from? So it all started back in December of 2017 when Congress passed the Tax Cuts and Jobs Act, TCJA, with quite a number of changes, including those that affected us as employers and the employment community. One of the most significant is what you probably have seen already on your 2018 tax returns when you filed your 1040s. And that is that there are no longer any allowances for dependent exemptions. You know how when you file your tax return, you would always count up your number of dependents plus you, spouse, and add them together, multiply them by a certain amount. That's gone. That's not there on your tax return anymore. Instead, the standard deduction increased, but there's no longer a dependent exemption. And yet, when you filled out your W-4s in 2018 and 2019, you were still, using, married and 2, single and 0, whatever number of exemptions there were. So there's a little bit of a disconnect between what the taxes that we're actually paying without dependent allowances, because they were done away with by the TCJA, and the way withholding tax is being calculated is ever since that law was passed, 2018, 2019. We'll talk about that in just a minute. What was the purpose of modifying the tax system and especially the withholding system under TCJA? Well, you have 4 points on the right-hand side that are really all the same thing. The goal was to decrease withholding. It's the way our system works, pay as you go. Employees usually end up with a refund come tax time. February, March, April, whenever they file their taxes, they get a refund. The goal was, why do we have to do it that way? Like, why take more money out of people's paychecks and then give it back to them? Let's increase their net pay by decreasing withholding and making it more accurate, thereby decreasing refunds, thereby giving the employees, the taxpayers, their money up front and stimulating the economy by putting more money faster into people's pockets. That was the basic thinking behind the legislation, or at least as part of the legislation. Now, what Congress was aware of, but really, was not able to do anything to cushion, were the employer concerns. Because if the goal here is to make withholding more accurate, in other words, we want to make the withholding more close to the actual tax liability. We want to bring it closer so you have less of a refund. Well, by definition, that's going to increase the complexity of the tax withholding system, including the Form W-4. It's going to decrease the privacy of the employee by asking them to do almost like a mini tax return on their W-4 and give that to their employer. And of course, it's going to increase the employer's burden because now employers are going to have to deal with lots more information, not just marital status, number of exemptions, any additional amount you want withheld. Now employers are going to have to deal with all kinds of financial information that their employees are going to be submitting to them in order to get this more accurate withholding. And employers are also going to have to be fielding the questions, because when your employee comes with a question and says, well, I don't really understand this, how do I fill out this form? Who are they going to come to? They're going to come to you, the payroll department, the HR department, their managers, their supervisors. So these are all employer concerns that were kind of inevitable byproducts of the TCJA. And I can see already, I just want to address a couple of the questions that, people are already kind of questioning what this is going to look like. We have one question: is the Social Security number required on the form, meaning on the Form W-4? We're going to see the form soon, so I'm going to put that question there, and you're going to tell me yourselves if it's required or not. Basically, that part, the personal information on the form has not changed. Another question is, for those people who want to keep their old W-4s, do we have to change something in Viventium? This is obviously coming from a client, and the answer is no. Viventium is handling everything for you, and we're going to take a closer look at how that's going to work. So just to address those first two employer concerns. Now, the question is, if the law changed in 2017, well, why is withholding only being revised and revamped in 2020? What happened to 18? What happened to 19? Well, 18, if you remember, the TCJA passed in December of 2017. So there was really no chance for the IRS to go ahead and make any changes at all for 2018. Everyone understood that. And they really were geared up for 2019. They tried hard. They really wanted to get it ready. They really wanted to have this new W-4 and this new little mini tax form system launched. They tried valiantly, but it was just too big. And they said, no, we're not going to be ready And so 2019, use the IRS calculator. At first they called it the IRS calculator, then now they're calling it the estimator. Use that to make sure that your withholding is as close as possible to what it should be. But we're sorry, we can't yet give you the new system to use. And then starting right away in 2019, the IRS was really full speed ahead in preparing. They actually contracted out to a private think tank study, which Viventium was invited to participate in. And they were very good at listening to feedback, both from employers and from HCM leaders in the industry. Viventium was a big part of that. They invited questions and comments. They actually, Viventium, we'll see a little bit later, submitted a couple of comments, and the IRS adopted 2 of them in their second draft of the form. So they issued a first draft in May of 2019. They issued a second draft in August, and they're on target and they're on schedule, and this really is happening. And the question is, what are employees supposed to do now this year to make sure that their withholding is correct? If their tax return is not based on exemptions and their withholding is, what are they supposed to be doing? So the IRS encourages you, the employer, to encourage the employees to use the estimator. That's at irs.gov, and they have a link to it up there. And that will help employees estimate if their withholding is correct, in order not to be underwithheld, in order to avoid unpleasant surprises at tax time, because if they are underwithheld, they're going to have penalties. And even though we're toward the end of 2019, it's not too late for your employees to go ahead, use the estimator, and see if they need to put any additional monies in their withholding. And there's certain employees that are most subject to, to mistakes, to inaccurate withholding. We'll see a list of them in the next slide. But it is a best practice, and I'll be discussing best practices with you as we approach this change. Best practice number 1, encourage your employees to use the IRS estimator. You might want to consider mentioning that on a pay stub message, a memo. Those of you who are using Viventium have the ability to put a memo on pay stubs. You can use our payroll stuffer, which is here in the handout, as an attachment, because that has the information for employees to go to. Or in any other way that you want to actually encourage employees to go ahead and to use the IRS's estimator. And you can also give them a link to the frequently asked questions so that they can ensure that if they need to make any adjustments in 2019, they go ahead and do that, and they have those amounts being as close as possible to what they should be. Now, who are the people that are most susceptible to errors in withholding, to being underwithheld and facing penalties? The IRS tells us people who expect to work only part of the year, people who have dividend or capital gain income, or subject to any other types of additional taxes, like there's something called the net investment income tax, for example. That means people with more complex tax returns. Or the other way, people who got large tax refunds in 2018, they should be using the estimator. People who have two or more jobs in their family, so that the standard deduction is being divided among those jobs, they should check it out. People claiming child tax credit or dependent or other dependent tax credits, and people who itemize. Those are the employees that are most encouraged to go ahead and use the IRS estimator, because they are most likely to wind up with inaccurate withholding and have to pay extra taxes at tax time. So that was 2019. And now comes 2020. And 2020, it really is happening. The change is happening, and here it is in front of your eyes. What we're looking at now is a draft of publication 15T. It's actually the second draft of 15T. These are not the final numbers. The IRS cannot yet offer the final numbers. They cannot yet publish them because they needed to wait for certain inflation indices, inflation numbers to be collected in October and to crunch them, which they're doing now in November. And they said in late fall, to quote them, they're going to be coming out with the final Form W-4 and the final 15T. Industry insiders are estimating that to be the end of November. We're probably not going to see that before the end of November. But actually, yesterday morning, the IRS surprised all of us, and they actually issued a third draft publication 15T, not the form itself, but just the instruction publication with the tables, just with some minor changes, discussing additional methods of withholding, discussing Indian gambling distributions, discussing a little bit of the more exotic and less common scenarios. So nothing that's really of concern to the general employment community, but they did actually offer a third draft up. So as you see, they're really working furiously to get this out. We're still waiting for the draft W4P for those of you who have pension and annuity distributions. That hasn't come out yet, although they had slated that to come out in September. What is encouraging, though, in this publication, in this third draft that was issued yesterday morning, they are addressing those who have to withhold for pension and annuity distributions. So they haven't forgotten about W4P, people. It's there in the third publication of the 15T, which you can check out. It's on the IRS website. And the form is changing, not just the taxes. Here is the new form. And as you see, the name of the form itself has changed. It's called the Employees Withholding Certificate, as opposed to the old version. Here's the old one, little form down there at the bottom. It was called the Employees Withholding Allowance Certificate. Okay, so the word allowance is now a bad word. It doesn't exist anymore. There's no more allowances in the tax system. It's been taken out. It's out with the old. And then with the new, it's now just called the Employees Withholding Certificate. Now, to answer clearly the question of our participant who asked, will the Social Security number be required? The answer is yes. It's still up there right on the top in box B. Social Security number is required. There are also a number of worksheets that come along with W4. And one of our participants asked, are the tax departments expected to manually complete the worksheets that come along with the form? And the answer is no, absolutely not. The worksheets are to be completed by the employee, not by the employer's tax department. That has to be very clear. Form W4 is an employee's certificate, and all of the information is completed by the employee, including the multiple job worksheet, including the deduction worksheet, including any of the other worksheets. All of it is completed by the employee, not by the employer. And even though I'm going to be explaining to you how to answer your employees' questions on the form, I want to give you a best practice tip. And I'd like you, as employers, to distinguish between two types of questions. There are technical questions. For example, there might be an employee who comes to you and says, well, I used to check off married, and now I don't see just plain married. I see either married filing separately, married filing jointly, and I file jointly. So what do I check off? Well, okay, that's a little bit of an exaggerated example, but that's a technical question, and you can go ahead and tell them to check off the second box. Or they might say, where do I put my qualifying child credit? Or where do I put my education tax credit? Which step does it go into? Those are technical questions, and go ahead and answer that, and hopefully by the end of today's webinar, you'll all have the answers you need, to be able to answer those questions. And that's fine. That's just giving them technical guidance. However, if an employee comes to you and says, well, I have a couple of mutual fund accounts and I want to know, how much money I should withhold. Can you help me figure out, if my dividends are such and such, how much additional withholding should I do? No, that's, you just refer them to their tax advisor, to their own CPA, or to use the IRS estimator at that link that you can give them. You don't want to go ahead and be answering those kinds of questions for them. That's like stepping over the line. So it's important for you to understand the form, of course, to be able to guide your employees at the same time and of course, this is a policy decision. I'm just giving you a tip here, but it's a policy decision that every HR department is going to make. Where do you draw the line and say, no, this information is something that we can't guide you on, and you can go ahead and ask your tax advisor about it. So let's take a look now side by side at the old and the new, what was and what will be. And let's compare the two forms. And as we're doing this, I want to give you some good news. Those of you who are with Viventium don't have to worry about any of this. It's all being taken care of for you, meaning the Viventium development effort is completed, and actually we're going to be showing you the screenshots of how you're going to be handling this, and that's something Malka will show you at the end of the webinar. For those of you who are not yet with Viventium, another best practice, tip number 3, is do go ahead and check with your payroll outsourcing partner if they are ready for this change, and if they're not, when is their target date for being ready? And if they can even show you their screen mock-ups, that would be great, so that you can go ahead and start training your staff and adjusting your internal processes, because there's going to be a lot of new data that you need to collect. You want to make sure that your own team is prepared and that you have collection methods in place to be able to capture this data. So that would definitely be some. And if you're using off-the-shelf software or any type of in-house software, again, you want to be talking with your development people or your software providers to make sure that they are geared up and that they're actually ready, because there's not that much time left, and we need to be able to start educating and getting our teams ready. Okay, so let's take a look. At the bottom, the old, little old W-4, pretty short compared to this big new almost tax return that you see on the right-hand side. Well, the beginning is pretty much the same. They did some editorial changes. The old form used to say your name, your first name. Now it just says first name. They took out some words there, no big deal. Used to say home address. Now it just says address. In the little encouragement box about verifying your information, it used to just encourage employees to check their last name and make sure it matches their social security card. And now the SSA actually has gotten a little more aggressive in saying check your name, meaning not just your last name, make sure it matches. And if it doesn't, check it out with Social Security. And that's indicative of Social Security's new policy of being more proactive about clearing out the suspense account. That's when names don't match Social Security numbers and they can't really post people's wages to where they belong, and they just post them to a suspense account. So employers are being asked to change their, to check their full name. And now the first real change is in the old line 3, where you have marital status. Now let's look at this carefully. There used to be 3 boxes. One was single, one was married, and the third one was married but withhold at the higher single rate. Now the IRS has kind of reshuffled them. We have the first one is single or married filing separately. That's the equivalent of the first one and the third one. That's like saying single or married but withhold at a higher single rate. Both of those people on the old form would check the first box. So again, that's a technical question. If your employee comes to you and says, which one do I check here? How do I do this? I used to do this and I want to do the same thing. Okay, so if you used to check box 1 or box 3, you go ahead now and just check box 1. The second one on the new form is married filing jointly or qualifying widower. That's a new one. I'm afraid that's going to cause some confusion to employees, but that's the equivalent of the second box for married, which is married filing jointly by default. Qualifying widower is not defined here on the form itself. And I don't suggest that you give a definition to your employees if they come and say, well, my spouse passed away this year, my qualifying widower. You would ask them, check with your tax advisor. You're not going to make decisions for people as to what their filing status would be, because it's only going to cause you grief later, and you really don't want to go there. And then there's a new surprise. The IRS has a third status, head of household. Never existed before. As a matter of fact, when you calculate taxes, we used to just have 2 tables, married and single. Now there's a third table called head of household. And again, those of you who are doing taxes in-house or through manual processes or using software, you want to make sure that your software now has, for 2020, 3 different tables, one for single, one for married, and one for head of household. And here the IRS gives a definition on the form who qualifies as a head of household. And I would suggest that if employees question you about it, you just direct them to the information right here on the form and you don't give them any further guidance. So that's box 3 on the old form. Now 4 is about Social Security number. Then we go down to line 5 on the old form. Total number of allowances you're claiming, and that is gone. That is not there anymore. It's not anywhere. You won't find withholding allowances anywhere on the new form. That was one of the big changes of the TCJA. Line 6, additional amount that you want withheld. That's there. That's down here in step 4C. Now they're calling it extra withholding. And they actually accepted the suggestion that the payroll community has been making. It used to say on the old form, it used to say amounts that you want withheld from each paycheck, which is a little confusing because what if an employee had 2 paychecks in 1 week? Do they still want that additional amount withheld twice? And so here they've been a lot clearer, and they say enter any additional tax you want withheld each pay period, which is a whole lot clearer. That means that even if an employee has 2 or 3 checks, they're still only going to have that amount withheld, not twice. So line 6 on the old form maps into 4C on the new form. And then at the bottom, we have a certification that, you know, I've examined the certificate and it's clear. They took that out. They just are having employees sign under penalties of perjury that it's accurate. I guess they figured it's pretty obvious that the employee signing that it's accurate. It means they examined the certificate, so they took that part out. And at the bottom, they have a place for the employer to fill out the form. Now, in the old form, it said employers only need to complete the bottom if they're going to be sending this form to the IRS, like if it was, you know, an employee with a lock-in letter when you have to send a change, or if they were using it for state new hire filings. On the new form, they don't tell us when to use that bottom section, nor do the instructions state anything. And that was actually one of the recommendations Viventium had made, which the IRS did not adopt, unfortunately. And so we're just going to proceed assuming that nothing has changed and the employer does not have to fill out that section, unless, like we said, they're submitting the form to the IRS, or unless they're using the form to send to their state new hire directory to do the new hire filing. Now, if you'll notice, I skipped line 7. Line 7 on the old form was where the employee claimed exemption, and you see it's not here anywhere on the new form. And we're going to talk about that as we move further in the webinar. How do employees claim exemption, or can they still, or what has to be done? What's that process? Now, I see a couple of people asking questions about the employee filling out the W-4. If an employee doesn't fill out the new W-4, how will we translate the current allowances to the new chart? Well, like I said before, the good news is if you're using Viventium, you don't have to do anything because the Viventium system is already programmed to do that translation according to IRS regulations. If you're not using Viventium, you'll want to take a look at publication 15T, which is still in draft. The latest draft was released yesterday morning, and that explains what to do if someone's still claiming married in 1, single in 2, and yet there's no way to calculate for that. So all those instructions are contained there in publication 15T of the IRS. Now, the IRS was also really good, and they went ahead and they did the W-4 SP in draft form as well at the beginning of September, which was very appreciated. This is the form that you can use to give to your Spanish-speaking employees. It contains all the same information as the draft W-4 itself, and when the W-4 is finalized, the SP will be finalized as well. Now, the question of the hour. Do all employees have to give in a new W-4? Well, originally, the IRS was indeed considering that. That was going to be one of the changes that they had proposed in the regulations, and there was a hue and cry across America of all employers, and that said, don't do that to us. We don't want to have to start collecting from every single member of our workforce a new W-4, and the IRS listened, and they did not do that. And so employees are not obligated to give in a new W-4 unless they are hired on 1/1/2020 or later, then they must use the new form. Or they're an existing employee, but they want to make a change to their withholding after 1/1/2020. They can't say, oh, well, I'm grandfathered. You know, I'm working here since 2010 and my form hasn't never changed and I'm changing it. I want to go back and use my old form. You can't do that. If you give in a change after 1/1/2020, you must use the new form. And all employees are encouraged to use the new form, and employers can go ahead and encourage their employees to submit a new form. Some employers might say, I don't want to have to maintain 2 systems. I don't want to have to deal with the old form and converting exemptions according to publication 15T. I don't want to deal with it. I just want to require everyone to give a new form. Well, you can't do that. Can't require it. IRS doesn't let you. But you can encourage it, and it really is in the employee's benefit. If the employee gives in a new form, they'll actually have more accurate withholding, less likely to get under withholding penalties. So it's encouraged. Now what I'm going to do with you, and I see a lot of questions coming in about this, I'm going to take you through step by step the new steps and explain them so that we can understand them. And we're going to start with, what do you absolutely have to fill out on the W-4? The only thing that you absolutely positively have to fill out is step 1 and step 5. That's the personal information, marital status, and the signature and certification. You do not have to do steps 2 through 4. They are optional. The IRS only wrote optional on step 4. They could have really written it on step 2 and 3 as well. I think they wrote it on step 4 because that's the one that's most likely to scare employees. But it's really optional. Employees do not have to complete 2, 3, and 4. However, we have the classic conflict, classic trade-off between accuracy and complexity, meaning, yes, it's more complex and probably less private to complete 2, 3, and 4, but if you do complete them, your withholding will be more accurate, and you're not likely to end up owing a lot of money at the end of the year, or even worse, you don't get penalized for paying in too much, but you do get penalized for paying in too little. So the more information you give, it is more complicated, but the better and more accurate your withholding is going to be. So let's take a look at step 2. Step 2 says, if you have more than one job in your household, meaning either you yourself hold down more than one job at the same time, or you and your spouse are working, then you have to do something to make sure you're not going to be under withheld. Now, let's take a step back and put on our accounting caps for a minute. Why? Why do you have to do something? Well, remember there's something called a standard deduction on the tax return, right? The standard deduction is built into the withholding tables, meaning when you as an employer go to figure your employee's withholding, or when your computer system does that, it's using IRS numbers that are already accounting for the standard deduction for this employee. Now that's hunky-dory and just fine if you're dealing with one job, one employee, one job, he gets the standard deduction or she gets the standard deduction. But what if there's multiple jobs going on in that household, either the employee themselves or their spouse? When they file their tax return, a joint tax return, they don't get 2 standard deductions. They only get 1 standard deduction. And yet when they're working, their taxes are being calculated with both of them getting the standard deduction built into their tax table. So the likely result is under withholding and underpayment penalties on their tax return. And therefore, if there are multiple jobs, employees are encouraged to complete step 2. And the IRS has done a yeoman's job in giving flexible options as to how to complete step 2. Take a look at the form. They've given you A, B, and C, and they're mutually exclusive. You either do A, or you do B, or you do C, but you don't do all of them. Okay, what can you do? The most private and disclosing the least information to your employer is A. Go to the IRS website and use the estimator. Figure out how much extra withholding has to be put down below on step 4C. Remember we saw before there's a place to put extra withholding on 4C. And your employer doesn't have to know why you're putting it there. Could be for any reason under the sun. Doesn't have to know that you have another job. Doesn't have to know that your spouse works. All you're going to do is use the estimator on your own and then put an additional amount to withhold on line 4C. Now, you do that for only one job. You put the additional amount only on one W-4. So let's say John has a job and his wife Jane has a job, and John goes to the IRS estimator, figures out how much extra withholding due to both of their jobs. John puts that on his W-4, tells Jane don't put it on hers, and now John is finished. Gives you the W-4, you're the employer. Jane has a change to her job. Well, John goes back to the estimator, figures out a new amount, and now has to give you, the employer of his job, a new W-4. So even though John had no employment change, it's a little bit confusing. You would think if John's job changes, he would be giving you a W-4. In this case, even if his spouse jobs changes, but since he's the one that put down the additional amount, he needs to give you, the employer, a W-4. So that means you as an employer may start getting more W-4s, higher volume of new W-4s, because not only will you get them when your employee experiences a change, but you should be getting them as well when their spouse experiences a large change in their income. It's also a reason the spouses are going to have to talk to each other. I think that maybe that was a social agenda that, you know, prompted Congress to pass this one. I'm just kidding about that. But there will have to be, and that's in the industry, we joke that this was the IRS's real intention here to get, you know, husbands and wives to talk. In any case, it is a little confusing because this extra amount goes on only one of the spouse's W-4s, and if there's a change to it, it needs to be changed only on that spouse's W-4. So that's option one, the most private. It's also the most accurate, and the IRS says it right there. For the most accurate withholding, go here. But what if someone doesn't have online access? What if someone tries to use the estimator, finds it confusing? What if someone is afraid to feed their income into a computer screen? They don't like it. There are privacy concerns, security concerns. For any other reason, what else could they do? Well, they could take option B. And option B is called use the multiple jobs worksheet, which is right here, multiple jobs worksheet, and figure out how much extra withholding. And again, it's pretty private because your employer doesn't have to know that you have 2 jobs. You're just putting down an extra amount on line 4C. Problem is, it's a little tricky to use this multiple job worksheet. Let's take a look at it. You take the higher paying job and you find it in the brackets on the left side. You take the lower paying job, you look across. At the intersection, now don't get scared that it's all X's here. It's just because the inflation adjustments haven't come out yet, and so the IRS can't put in numbers yet, but there will be real numbers here. I know the first time I saw this, it looked a little scary. But you take whatever number appears at the intersection of those two, and then you run it through a little worksheet that the IRS gives you, and then because you're going to de-annualize it, and you put down how much to withhold per pay period. Now that's good if there's only 2 jobs. What if there's more than 2 jobs? Then it gets even trickier. First, you have to iterate through this twice. First, you take just the 2 top paying jobs, find the intersection, take that amount. Then you combine the 2 highest paying jobs, look up the total amount on the left, and then find the 3rd job across the top. Take that amount also, add the 2 amounts together, and then de-annualize. So it gets pretty hairy, pretty tricky. Again, the IRS is trying to give employees options so they can maintain their privacy, but employees might not like that one either. They might say, whoa, this is just too complicated for me. I don't want to get into this. So then the IRS gives you option C and says, if you have only 2 jobs, only 2, not more than 2, you may check this box, the magic box. And in that case, if you check it, then the other job should also check it on their W-4. So if you, the employee, are working for 2 people, check that box on both of them, or if it's a husband and wife, each one checks it on their W-4. And this will work if both jobs are about the same pay. And that's all you have to do, just check the box. Your employer is going to have to do the rest. By the way, here's tip number 4, best practice. Employees are allowed to check the box even if they don't have multiple jobs, just if they want additional withholding. That's an important thing. Let's say an employee comes to you and says, look, I don't want to tell you anything, jobs or no jobs, but I know I need a little bit of extra withheld, or maybe, you know, a significant amount of extra withheld. Is there any way, without putting down numbers, that I can get you to withhold more from my return, from my paycheck? And the answer is yeah. You're allowed to check the box on box C to request higher withholding. Now, I want to look with you for a moment back at those tax tables that we saw that are coming up for 2020. And if you notice, there are now 2 sets of tax tables, 2 ways of doing taxes. And your system has to support both, and Viventium does. And each one of the 2 has 3 filing statuses: married, filing joint, single, and head of household. The first one, the standard withholding tables, are used for the pre-2020ers, the ones who have W-4s from before 2020, or if it's a 2020 or later form, but the magic box is not checked, meaning they're not indicating higher withholding for multiple jobs. And then there's the higher schedule on the right, and that you use only if it's 2020 form, and only if that magic box is checked, because these tables result in higher withholding. So if someone's indicating that they have 2 jobs, this would be the table to use. That's why we call it the magic box, because it's the box that's going to be determining which set of tables the employer is going to be calculating under. And again, this is something that you should be discussing with your payroll providers now, how ready are they for this change? So that's step 2. And the IRS already tells you if you have privacy concerns, do A or B. Use either the estimator or the worksheet, and then you don't have to tell your employer yet. Because, some people might say, well, I don't want my employer knowing that I have more than one job. They know enough about me already. I don't need them telling you. So fine, go ahead and use A and B, or of course you can go to a tax advisor and have them just calculate for you an additional amount to put on line 4C. Now, steps 3 and 4 get a little more confusing, because we said if you're checking the box, check it for both W-4s. However, steps 3 and 4 only do for one of the multiple jobs, or if you only have one job, obviously. But if there's more than one job, you only do it on one of the job's W-4s, and it'll be most accurate if you do it on the highest paying job. So what's step 3? Again, it's optional. But if you have qualifying children under age 17, and you're getting that $2,000 child tax credit, multiply the number of those children by 2,000, put it here. If you have a dependent, other dependent, that's getting the $500 credit, not a qualifying child, put it here, multiply it, put it here. Add them together, put the total credit on the right. By the way, if you have other credits, it's not stated here, but if other credits like the education tax credit, the foreign earned income credit, foreign tax credit, if you pay tax in a foreign country, you can add them in here also, even though there's no separate lines. You just add up the first 2 lines on the left, add in any additional credits, even though the IRS doesn't say that. I wish they would have, but they say it in the instructions, and put the total on line 3. So, sometimes a client will come and say, I don't understand something. My employee gave me a W-4. It has a total on line 3, but it doesn't equal the subtotals of the lines on the left. Is that compliant? Like, do I have to do something about that? And the answer is, it's fine. Just relax. No problem at all. The employee is simply adding in other credits that they're not showing you, and that is compliant. It's a compliant form. However, the IRS says, what happens if an employee fills out these 2 lines on the left and doesn't put any total on line 3? Are you supposed to total it up for them? No. The IRS just says, consider asking the employee if it is intentionally blank. So don't make any assumptions. To stay in compliance, don't plug any numbers for your employees. That's a big no-no. If there's anything you see that doesn't make sense, like they put numbers and they just forgot to put in 3, ask them. Ask them if it's intentionally blank. Now, if an employee puts an amount in step 3, what will it do to their withholding? It will reduce their withholding, because these are additional tax credits that they're claiming. So it's going to reduce their withholding. It will increase their net paycheck, and it will give them a lower refund at the end of the year. Okay, let's move on now to step 4. I just copied it over for you here so we can see it a little bit more closely. And 4 says, oh, just go ahead and tell your employer about all your other income. Like if you have bank accounts, dividends, retirement income, interest, anything, just go ahead and disclose that to your employer. So, of course, that's really scary, and I'm sure employees are going to get nervous when they see that, and that's why I think the IRS put the word optional specifically there to really stress that you don't have to do this. This is other income not from jobs. We're not talking about a second job or a spouse's salary or anything like that. This would be other income that you have, generally non-earned income. Keep in mind, employees can be told that they don't have to do withholding from their paycheck for their stocks and bonds and CDs and interest accounts. Why? They can file Form 1040-ES. They can make estimated payments once a quarter, and they can pay the tax on an estimated basis and not do it through their paycheck. So, more sophisticated taxpayers with complicated tax structures and CPAs that are doing their tax for them probably would not choose to use this. But there may be many taxpayers who, don't really want to have to deal with making estimated payments. Just do everything for my paycheck. Leave me alone. So fine, and if they have no problem with it, they can put down their other income on line 4A. And you as the employer, your system is going to have to be able to follow the instructions in publication 15T and account for that other income. If an employee puts an amount on the other income line, what will it do? It will increase their withholding because now they need to have more tax coming out. It will decrease their net paycheck, and it will increase their potential refund. On the other hand, B, is for deductions. So if somebody itemizes, doesn't take the standard deduction, or has any other, not just itemized deductions, it could be things like any other type of deductions they may have, they can put that on line 4B, and that will then decrease their withholding, increase their paycheck, and reduce their potential refund. Okay, and it would only be the deductions here on the deduction worksheet that actually exceed the standard deduction. You see what you're doing here? They're asking you to put down an estimate of your itemized deductions, and then you max it out. You take the excess over the standard, because remember, the standard is built into the tables already, so you don't claim all your itemized deductions. You only claim itemized deductions that exceed the standard deduction. And then if you have any other deductions, student loan interest, IRA contributions, you know, that those types of things go on line 4. And when you're finished, you put the whole total back up on the front of the form for your employer to see and to decrease your withholding accordingly. And then the last line is extra withholding, and enter any additional tax you want withheld per pay period. And here is a big red light that we in the employment industry begged the IRS to change, because we said you are for sure going to be confusing employees doing it this way. Why? Well, when we put down our child tax credit, was that an annual amount or a per pay period amount? It was annual. It was $2,000 times every child, right? When we put down our other income, it's the annual amount. When we put down our itemized and other deductions, it's the annual amount. And then suddenly the IRS says, enter any additional tax you want withheld per pay period. Now, we're grateful that they put the words pay period in bold, but they did not accept our suggestions that that be changed and brought into sync with the rest of the form. So if employees make a mistake and they know they need $10,000 extra withheld a year, and you get a form with like some huge amount here on line 4C, you know, $10,000, $7,000, something that doesn't really look like a pay period amount, you can't change it. Again, you don't, that's not your job, but you may want to consider asking your employees to review that and pointing out to them the technical point here that this is supposed to be the amount per pay period. And again, anything put on line 4C will increase the withholding, it will decrease the paycheck, the net check, and it will increase potential refund. What about employees who don't submit their new forms W-4? And I saw some of the questions that were being asked were about that. So let's just look through an example. How would that work? Well, again, if you're with Viventium, you don't really have to listen to this example because it's being handled for you. But if you're not with Viventium, let's step through it. Let's say an employee is married in 2 and gets $800 a week. So first you annualize the wage, let's say times 52. Then for every allowance, they claim married in 2, you take $4,200. So this case would be $8,400, and you subtract that out of the annualized wage, and that's called the adjusted annual wage. Then you go over to the left-hand table, this one over here, because this is a pre-2020 form. You find the bracket that they fall into, you take the percentage, you add the fixed amount, and then you de-annualize and get to the tax to withhold. So the $4,200 is the magic number for allowances for those who are using pre-2020 forms. I know someone had asked me about that. What about people who want to claim exemption from withholding? What do we do with them? So the IRS has said, just tell them to write the word exempt or type the word exempt under line 4C in the blank space. Why the IRS didn't put a line for it there, I don't know, but they didn't. Just write it in. And if you're using a computerized system for collecting W-4, that's fine. You can have a checkoff box for exempt, but it has to state to the employee that by checking this box, you are certifying that you meet the 2 conditions, meaning that you had no federal income tax liability in 2019 and you expect to have no federal income tax liability in 2020. Keep in mind that these exemptions still expire once a year, so that if they file exempt in 2020, it's going to need to be renewed by February 16th, 2021. And what about those people who filed exempt in 2019? So they're going to have to file a 2020 form, not a 2019 form, but a 2020 form, and give it to you by February 17th this year of 2020 in order to continue their exempt status. What if someone is hired in 2020 and does not submit a W-4? So you just treat them as single with no adjustments. There's no such thing as single and zero anymore, but you treat them as though they filled out the W-4 saying single with no further adjustments. What about NRAs, non-resident aliens? So the IRS is still planning to issue further guidance, but because they haven't said where on the form you indicate if you're an NRA, but they did tell us that there's going to be two tables again. For the pre-2020 W-4s, you add this amount, and for the post-2020, you add a different amount. And we know this does not apply to students or apprentices from India, but other non-resident aliens, these would be the amounts that we will add on. And the IRS has said that they'll issue a new Notice 1392 for those of you who have NRAs, and it will contain further guidance about how to use the form. Viventium is ready for the changes. Our system was written with such flexibility to begin with that when we in compliance came over to our development team and said, you know, here's the law that's coming out, you know, how many months is it going to take? They looked at us and they said, this is not a matter of months, it's a matter of weeks. Our system allowed such a smooth and simple transition that it was, you know, really a pleasure. On our user screens, we have online tooltips where you just like hover over the field and it shows you what information to fill in there. Our client services teams are ready and waiting to answer your questions, and our subject matter experts are here waiting to provide you with the insight you need. I give you here just on the slide a copy of one of the letter actually that Viventium submitted to the IRS when the comment period was open on the forms, and two of the recommendations that we made, gratifyingly, were indeed adopted by the IRS, and we do really appreciate that they've been working with the community all along to get the input, and they really have done a very good job. And so now I'm going to pass the baton over to my colleague Malka, who's going to step you through the actual screens and show you what it looks like in Viventium and how the Viventium screens correspond to the W-4.
Thanks, Yonina. So as Yonina mentioned, the development team at Viventium is in its final stages of updating our user interface to accommodate all the changes on Form W-4. So we wanted to give you a sneak peek of what that is going to look like in the coming weeks. So right in front of you now is the taxes page when you hire a new employee. And you can see in the middle of the page, there is a new box, a checkbox for the 2020 W-4. So if you hire someone on or after January 1st, 2020, you're going to come in here and check that box. Or if an existing employee submits a new W-4 on or after January 1st, 2020, of course, they should be using the 2020 version, and you would come in here and edit their tax profile and select that box. Now, the IRS has said that once a 2020 W-4 is implemented for an employee, that employee can't revert back to the 2019 or an earlier year version of the form. So if you came in here and made an error and need to uncheck the box, you are going to get a warning just reminding you that you can't go back to the 2019 or earlier version. Of course, if it was a clerical error or if maybe you updated the wrong employee by mistake, you will be able to uncheck it, but you will get the warning just to remind you of the IRS law. So once you check that box, you are going to have all these fields now open up for you, and we're going to show you how those fields correspond to the 2020 W-4. So step 2, as we just saw with Yonina, is if an employee has multiple jobs or their spouse works. So if they check that box for higher withholding, then in Viventium, you're going to check the multiple jobs checkbox. Moving on, step 3, if the employee wants to claim any dependent credits or any other credits and they fill out line 3 with that amount, then that amount should get transferred over into Viventium into the dependent credit field. Step 4, if an employee chooses to disclose any other income like interest or dividends on line 4A, then that amount ends up in the other income field in Viventium. And on line 4B, if an employee enters any deductions that they have other than the standard deduction, then that amount would get entered in Viventium in the deductions field. And again, lines 3, 4A, and 4B are all annual amounts. And lastly, in step 4, line 4C, if an employee wants to add an additional per pay period withholding amount, they would enter that on line 4C on the W-4, and that would get entered into the additional amount field in Viventium. Now, in the blank space at the bottom of step 4, if an employee writes exempt, which means they didn't have any federal withholding liability in the previous year and they don't expect to in the coming year, then the don't calculate checkbox would be checked in Viventium. Now, this is different than the exempt selection, which you see higher up on the right-hand side of the screen. Exempt would be if an employee doesn't have any wages subject to federal withholding, meaning box 1 of the W-2 would be blank. That's not what the IRS means here when they say write an exempt at the bottom of step 4. What the IRS means is that the employee does have wages in box 1 of the W-4. They're just choosing not to have any withholding taken out. So if that's the case, then definitely go in and check the don't calculate box in Viventium. And once completed, you would go ahead and save this, and you would come to the employee profile. We can see here this employee has multiple jobs. They check that checkbox. They have a $4,000 dependent credit. And if this employee ever wanted to make any changes and they submit a new W-4, it would just go in here and edit this information. So again, this is in its final stages, and all Viventium clients should be able to see this in Viventium in the coming weeks. So I'm going to send this back to Yonina to wrap things up.
Thanks so much, Malka. On this slide, we're looking at some important links and resources. First, we have on the right-hand side over here, we have the actual links to the draft form, so you'll have that for your reference. W-4, the 15T, as I said, they just released a new draft yesterday morning, and the frequently asked questions that it's advisable to take a look at, familiarize yourself with them. On the left side, we have some great Viventium resources. There's a blog that goes in detail in terms of the changes, discusses a lot of the information we've covered here. We also have a video and podcast that talk about some of the changes. And we'll soon be publishing the Q&A based on the webinars we've been conducting. I want to just take a minute or two now as we're wrapping up to answer some of the very significant questions that have come in. And I have one about state W-4s. So someone asked specifically about New Mexico. If a New Mexico state tax is based on the W-4 exemption, how will that equate on the new form? There are actually 7 states in the country that do use exemptions and don't have their own form, because some states have their own form, and they rely on the federal form. And Viventium is a member of the American Payroll Association. The American Payroll Association has sent out a questionnaire, sent the question to those 7 states. What will you be doing? Will you abandon the idea of allowances just like the federal and go on using the federal W-4? Or will you develop your own form so that you continue using allowances? And I just checked in with the APA yesterday, and so far they have not gotten any responses from those states. So this is kind of like a cliffhanger for those of you who do payroll in states that do not have their own form and use allowances. We're going to have to kind of wait and see what they're going to do and what they're going to come up with. Another question someone asked was, do you think that this is going to lead to a lot of mistakes and confusion? And yeah, I mean, the general consensus in the industry is that it will, which is why education is such a crucial factor here. Again, those of you who are Viventium clients, you know all of the resources we've been putting out there for you. We're actually going to be doing another webinar on this same topic later in December, and you'll be getting registration links about that as well. And that will hopefully have much more finalized information as the final numbers are published. And And one last question someone asked about an employee wanting to have additional tax withheld. If you choose to take more tax out, will you still be able to do so without incurring a penalty? And the answer is yes, that has not changed. If someone wants to have additional tax withheld, there's never a penalty for paying too much. The only penalty is your own suffering of losing having to wait to get your refund back. But that continues to be the case. There is no penalty for choosing to take out more taxes. And I want to thank everyone, including Malka and Rachel, for organizing us today. And thank you for all your time participating. And I welcome you to reach out to me directly. And my email address is yshineweather@viventium.com with any compliance-related questions about the new 2020 federal withholding. Thank you, and have a great afternoon.